Hello, everybody. So another pretty strange day in the market with Bitcoin pumping midday and then crashing in after hours. It's a classic at this point, but anyways, MSTR managed to stay up until just about 30 minutes ago. It managed to stay above 300. I'll still count it as we stay above 300. And sure enough, we had a bullish price of Bitcoin midday, and we had some good news. But the dip, one of the board members bought the Saylor dip, the strategy dip, $2.3 million buy. Not too bad. And we had Citibank issue a positive price target of 485. Note that Citibank, Saylor has praised Citibank multiple times in his podcast whenever he talks about history and the founding of Citibank. Probably nothing to do with that, but always fun to see Citibank, giving a nice pat on the back on MSTR. And so MSTR would be probably pretty undervalued compared to what they think. And I obviously think MSTR is very much undervalued. Today the headlines are happy though. Today the headlines are not attacking Bitcoin. Today the headlines are attacking gold. Gold plunges is the headline of the day. And so we're happy that we're not the target of these headlines anymore. And in fact, we had very good headlines for Bitcoin at the beginning of the day. Bitcoin breaking 114,000. Like I said, didn't last very long. Nonetheless, maybe fears as to the shutdown still continuing. We were hopeful at the beginning of the week for the shutdown. It looks like it's not going to happen tomorrow either. So, Bitcoin is just stuck in the valley of despair, but Bitcoin is falling, and so maybe that is a sign of an early rotation. I want to talk about one of Saylor's latest interview. It was actually a BTC in DC interview, but they posted it late. Anyways, couldn't find the link of that interview anymore. The point is, I listened to it, and there's a few new thoughts in that latest interview of Saylor when he talks about the preferred. And his thought to me was, of course, that Strike, Strike is kind of like the first thing that came to their mind, and that's how they created Strike. But when you listen to this latest podcast, he was talking about Stretch and really focusing on Stretch being the perfect instrument. The use case of Bitcoin, per Saylor's new philosophy on the asset, is to use Bitcoin to back debt up with that Bitcoin. And he goes through the history, and in the beginning you have debt backed by gold, and then you had debt by government and government printing. That was later on. Mid in these five centuries, you also had debt backed by business cash flows. That was some of the early debt. And so he argues that debt backed by Bitcoin is the more superior type of debt. It's more superior than debt backed by monetary printing, by gold, or by business cash flow. That's what he argues. And of course, the fact that Stretch could be fixed, is absolutely amazing in his view of the world. He said I wanted to do it weekly or daily, but it's impossible on the current rails to do that. And so unfortunately, it's probably going to be trading within $1 of 100 for a little while. But he praised it as the perfect instrument. And the interviewer asked him, what does he think about Strike? And that was a very interesting way of thinking about it. So essentially, because Strike comes with a call option at $1,000, it's redeemable at $1,000 of shares. The way you can think about Strike is that Strike is worth the debt instrument plus one-tenth of a MSTR share. So really, with MSTR at $300, that means that you have $30 worth of MSTR common value locked in Strike, and that $30 worth of value will unlock once strategy reaches $1,000 a share. So the proper way to think about it, at least what Saylor said in the interview, is you take $88, you remove the $30 of value, of MSTR value, and the asset, of course, still yields $8 a year, 8% on a $100 par. So technically, you're yielding 13.7%. Technically, if you look at Strike and agree that $30 worth of Strike is actually the MSTR asset. And so that makes it actually a probably better instrument than even Stride or Strife, right? That makes it even better than that. Saylor's perhaps regrets issuing Strike. At least that's the feeling that I got from that interview. That was pretty interesting. Changing the topic, let's talk about an entirely different topic. I want to talk about HIMS. So, of course, on this channel, I talk a lot about HIMS, a revolution in healthcare, in my view. They are a much bigger company than what the market makes it out to be. It's a big stock for me. Dudum announced that they were investing in this MCED, multi-cancer early detection test called Galleri, the Galleri test by the company Grail, investing in that. And so, of course, this company is pre-revenue. They're doing a study, and their study is very interesting, can detect up to 50 cancers early. It can help them detect early cancers. And HIMS is an investor in this round, and this round will fund the company up until 2030. And so, because HIMS is an investor in this company, you could expect that from the moment this test actually gets to phase 3 and gets approved, guess who could offer that cancer test, that early cancer test, right? HIMS. HIMS could likely offer that early cancer test. And they are moving into the lab company segment. With the Tribe acquisition, they acquired this Lancet device. You put it on your arm, you press a button, you have drops of blood that flow, and you send the blood back for analysis. Dudum is working on lab tests, right? And you could assume that with HIMS, you could get your physical, you could get your lab test, and you could get your cancer screenings. So the point I'm trying to make is that this investment is very strategic, it's very long-term. It's not a short-term thing, it's a very long-term thing. But of course, if you're an early investor in the early rounds of that company, you may get access to the product sooner than the rest of the market. And this goes entirely with that vision. So you could imagine, you could have like a basic health or cancer screening, and they could sell that at HIMS.com. So I find this to be a strategic move. HIMS behaving more and more like a larger company, thinking over the long run, and the stock price of HIMS still has nothing to do at all with the fundamentals. We're down an overall nearly 4% today, and we're down 22% in a 5-day period, 22.7% in a 5-day period. All of the hype of menopause went right away. This stock is crazy volatile, even more volatile than Bitcoin at this point. And so I'm happy to own it. And I wanted to finish up with some big movers today, of course. And these big movers are, Mara and CleanSpark, still Bitcoin miners, of course, but Bitcoin miners transitioning to AI. And then you also had Nebius being a pure play AI cloud business with a bunch of VC investments. They were all down in unison. I could have put Iron. Iron was down quite a bit. The AI data center trade seems to be taking a hit. Figure of speech, because if you look at MNAV of Mara, I remember 3 weeks ago, Mara was trading at a 0.98, right, or 0.96. So not quite a dump like some people could expect, but we're taking a breather, and I think some of that breather is actually pretty healthy. That cool off is pretty healthy because Nebius had run a lot. It was past 130. It had run a lot. I find Nebius at 102 right now in after hours. I find that pretty interesting at 102. Same, if CleanSpark keeps dropping back towards maybe 15 and Mara towards maybe 18, 17, I find that interesting. I think the market is cooling off because I've seen this interview of Andrej Karpathy, of course, the former big AI guy at Tesla, kind of trending, talking about how, AGI is still a long time away and, we still have a lot of work to do on AI. And so I think it's cooling off a little bit of the AI hype. But there's no doubt of some of that run has to be done with hope, with some AI hype. Over a long term, there's no way I think AI is hype. Over the long term, AI is 100% real. Over the short run, clearly we have some volatility. Clearly the market being focused on other things and annoyed by other things, like that shutdown, for example, which really needs to end for things like, for example, crypto to take off, right? We're waiting on the Solana ETF. We're waiting on a lot of crypto bills. We're waiting on a lot of stuff. It would be good if that shutdown ended at this point. But this cool off, as far as I'm concerned, because these had run quite a bit, this cool off is pretty healthy. Happy to see them cool off, actually. It's pretty healthy. It sets us up for another run. So anyways, this was not investment advice, not financial advice. This is only entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.